And Devin, I want to start you off on this price action. You would think riskier assets, especially after that hot inflation print, they turn lower. Why is Bitcoin so resilient right now?
Well, I think it's just simplistically supply-demand dynamics, and the ETF, we're still in the very early days, so I actually think demand could grow pretty materially or even exponentially from here. But there's been a lot of demand with the ETF coming in recent weeks. And so I think we're in the kind of the first inning of that demand, though. If you think about the sponsors of the ETF and you think about the tens of trillions of dollars of assets, the next wave is going to come when financial advisors actually allocate to the asset class in a broader asset allocation plan, and that hasn't even really started yet. So I think this is kind of early, people getting in, early adopters, small RIAs that are putting in, their clients' capital into Bitcoin. But I actually think that as that expands out, you're going to see even more demand. So that's really there's a multiplier effect on capital. So as small amounts of capital come in, it pushes the valuation higher. And I think again we're in the early days of that.
And these new spot Bitcoin ETFs, what do they kind of mean for Coinbase? I asked because we've had other analysts come on and say, listen, it might be bad news for Armstrong and his team, because to the extent that some traders and investors might think, I want exposure to Bitcoin, I'll sidestep Coinbase. I'll pile into these new shiny vehicles.
Yeah, so I'd take the other side of that. I'll actually give you one stat. So Robinhood reported earnings last night. They said they offer all 11 of the spot Bitcoin ETFs. They said that 95% of the volume that's happening in crypto is still happening in spot, not on the ETFs there, because people want to own the spot. So what's happening with these ETFs is this incremental capital. You've essentially removed a barrier for a certain subset of investors to get access. These are financial advisors that are not going to move their customers' capital outside of the firm, outside of their own custodian. Now they can custody it within the same platform. And so this is more capital from them coming in, and certain institutions want to own it in an ETF structure. And so it's the right wrapper for certain types of investors. People that are comfortable buying it in a spot form, which is really what the world has been up until January of this year, those investors are going to continue to buy spot. And by the way, if you buy spot Bitcoin and then you buy a Bitcoin ETF, I think that ultimately what happens is people then start looking at what other cryptocurrencies are out there, what is Ethereum, what are some of the other cryptocurrencies that are not in an ETF wrapper. And so that's where, for a company like Coinbase, just more interest in the space, more adoption drives more activity. And I think that's what we're seeing. You're seeing huge volume. The volumes at Bitcoin are up, at Coinbase are up over 30% in the first quarter relative to where they were in the fourth quarter of last year.
Yeah, Devin, you mentioned Robinhood, those positive earnings results. They did post a surprise Q4 profit, better than expected revenue. That included a 10% growth in cryptocurrencies revenue. So how does that factor into your expectations when Coinbase reports earnings tomorrow?
Yeah, I think there is some similarity. So I think people are more engaged in the market, and crypto was one area for the fourth quarter that was very active. But I think Robinhood, obviously, it's a broader platform around investing, and they saw just in 2023 37% revenue growth. At the same time, they got their expenses under control. So now this is a firm that is profitable. And so I think, like in terms of connectivity, Coinbase is doing a lot of the same things. They're reaccelerating their revenues, and they are also very focused on expenses. They've reduced headcount earlier in the year, and so there's similarities there. But Robinhood, had a very successful end of 2023, and then give a very good outlook for 2024. And the stock is just cheap, and that's why it's moving today. It's been beaten down over the last year and a half. Now people are starting to come back to it. $5.3 billion of cash, which is half their market cap. People are seeing value in that.
And Devin, its stocks had it's done about 10% so far this year, but to your point, you pull back the charts up 165% over the past 12 months. You have an outperform on the name, so a buy. What are the catalysts ahead, Devin, that you would tell viewers about that you think moves this one higher?
Yeah, so it's interesting, this has become a fundamental story. So you go back 2 years, nobody was thinking Robinhood or firms like Robinhood that we're going to get to profitability. Robinhood's actually now GAAP profitable, not just fake earnings, it's GAAP profitability, and they're very cash generative. So I think they can actually justify their valuation on real earnings. And so we look at 2025, stock's trading at roughly 7 times EV to EBITDA, which is very cheap for a company that can grow. So I think that as people look at the growth potential, revenue growth of this company, they're going to get more excited. And that's actually what's happening today. So I think that will continue, assuming they continue to execute, which is our view for the company.
And so Devin, so you're a believer, valuation still looks attractive after this run. Before viewers pile in though, what are risks to your thesis? What are downside risks you got to think about?
Yeah, I think that it's a little bit of engagement in this in investing. Investing has been very hard for the last 2 years. It's not just retail investors; it's institutional investors as well. And so, to the extent interest rates are stabilizing, moving lower, generally that creates a better investing backdrop. To the extent that doesn't happen and the macro environment gets more complicated again, I think that's where transaction activity for a firm like Robinhood could suffer, and it would be more like the last 2 years of kind of slower activity. So we do think we're kind of pulling out of the trough here, and things are getting better, but that's a risk. And then the other side, interest rates moving down, there is some kind of negative effect for them from that dynamic. The good news is they pass along the vast majority of the benefit of higher interest rates to their customers, but lower interest rates, there is a little bit of an offsetting piece. So you need to see transaction activity more than offset call it the negative impact of lower interest rates.
All right, Devin, thank you so much for joining us today. That was really helpful.
Yeah, great
All
to see you
things
guys.
Coinbase. Thank you, sir.
Thank you.